Hey everybody, this is Brandon from Galaxydoc Market. Today is October 3rd, 2024. It is approximately 5:13 p.m. After the market has closed, and it is Rosh Hashanah, folks. And weird things tend to happen that are historically relevant, especially in the global and geopolitical spheres. So we got to keep our eyes peeled. The topic of our video today is there's just way too many similarities and conditions that exist very similar to 1987 October 27th crash. And those conditions exist, and I'm going to show you what those are. So let's move forward. Here's the disclaimer. Pause it, read it. If you agree, please move forward. And also, please thumbs up, share, and like, and subscribe to the video. We really appreciate it. Okay, so we're also on x.com at Galaxydoc Market. Follow us. We put a lot of great content, a lot of lively discussions, and it's just something that you won't find on the YouTube. All right, so let's get right to it. Okay, so what led to the 1987 October 27th crash? And I think I was during that time. I think I was like I'm dating myself, but I was I think finishing my sophomore year, maybe junior year in high school. Yes, I've been around that long. Okay. And here are the similar situations, but this is literally historically what was going on during that period. Number one, strong bull market. Okay, everybody and their uncle, including my parents, were talking about the stock market, whether they were investing in it or not. It was a spectacle. The market was very, very strong, and market was near the top. Investor optimism and greed goes along the same thing, right? That we talked about. Here's the thing, the gold at that time was also in a secular gold bull market. The gold was literally rising every single day and hitting all-time highs during that period. The other issue was the rising inflation, okay? Just like right now, there was rising inflation, and because the Fed began to do a hiking cycle, just like we've been in, okay, it was slowing down the economy, which was leading to discussions about stagflation again. Of course, at that time, computers were all the vogue. Those were Commodore 64 and Apple IIs and IBM PCs, if you remember those days. These new computer trading algorithms were using the derivatives to create insurances on portfolios, selling covered calls and puts on your existing stocks. And then, what could go wrong, right? Rising tensions, again, surprise, surprise, in the Middle East with who? Our favorite friend, Iran. So, U.S. warships, this is what triggered it on Sunday, began firing on the oil rigs, and everybody ran for the hills, and this caused a panic that I think triggered the massive sell-off over the next couple of days. Reminding you, though, previously to 1 week prior to this event, the market had already fallen 10% down. And that is kind of the similar situation that we're in. We're in all-time highs. Okay, market hasn't corrected the first 10%, but the conditions exist that are very, very similar. Is it going to be exact? No, it's going to rhyme though. And here's the other thing, okay? Rising Fed funds rate in 5.8% from October 1986. This is way after Volcker period. So 5.8% was actually considered pretty low back then, okay? In October 1986, by the time 87 came, it's a little different because we're already cutting now, but they had raised it to 7.2% in October 1987. Regardless, the market at that time had been in a hiking cycle whereby the Fed was trying to tame the inflation. Okay, so let's go get moving. So at that time, and this is the S&P 500 monthly chart dating back from 1980 all the way to 1990 of October. And you can see that the market had basically gone straight up, right? And leading up into that event, into October and July, the markets were hitting all-time highs. And in fact, in October, we did hit all-time highs, kind of very similar to where we are right now, okay? As SPY index, okay, had hit 575 before. I think that may have been the blow off top for us, but that's topic for another discussion. It hit 330.15. Can you believe that? And then in the ensuing couple of weeks, it had dropped all the way down to 225.75. Of course, right after that, the market resumed on its bullish ways, despite the hiking cycle. Okay, so that's the conditions that are very, very similar to what we have. One thing I do want to point out to you is that one day decline, okay, after the U.S. warships started firing on the oil rigs due to provocation, 22.6% in one day, but by day two, we had fallen 56.8% in 2 days. Am I saying that it's going to fall that much? I don't know. We're going to have to see. But it's going to rhyme if everything comes true. And, throughout history, things happen. One thing you do want to remember, okay, this is something that's very, very important, is that the prior week, before the first 22.6% decline, they had declined 10%. Okay, we haven't declined at all. We're just chopping around between 575 and like 568, right? And so basically that is the range that we're in. And the question that I'm posing to you, or the things that I want you to look at, is there are conditions that are very, very similar to 1987 right now, okay? And that these type of declines might be a possibility. We are due for a pullback anyways in this market. We are also on Rosh Hashanah, which is basically a Jewish holiday that a lot of these weird and historical events like market crashes, wars, or end of wars happen. Okay, you want to find out more about that, just go Google Rosh Hashanah and stock market crashes, and you'll see what I'm talking about. Secondarily, gold also had been on a secular bull run starting in 1986. We had basically at that point, leading up into that October period, gone up significantly, and they were beginning to hit all-time highs, just like we are right now. After the October event, gold basically had gone up, okay, about 28.4% from the lows to the highs. Okay, notice that it extended into November and December, and I believe similar things will happen. If similar type of crash occurs, we can expect at least these type of a one-day type of a movement, and also through the next couple of months. Gold is already hitting all-time highs. It is near all-time highs. We're basically chopping around that 2,700 to 2,688, 2,670 level, building energy to move higher. Those are the similar conditions. Now we want to talk about similarities as we speak on this October 3rd, 2024. We are in a strong bull market. We are near all-time highs, right? And so that is something that we need to pay attention to. The second thing is obviously investor optimism and greed, right? This is what kills. And so where are we in that situation? So where we are right now is, despite the fact that there might be World War III possibly happening, and that things are tense, markets at all-time highs, and we have some very keen uncertainties about this presidential race. We are at greed. This is as of October 3rd, as the market closed. We're at 67. I mean, this is what happens to the retail traders, and I've been always saying, don't become a exit liquidity for the big boys, okay? People like Warren Buffett, people like Bank of America, Jamie Dimon, Jensen Huang from NVIDIA has sold at least a big portion, to the point in the billions of dollars worth of his stocks right now, and they always do this right before the crash. Okay, so we had the investor optimism, and then of course we are in a secular gold bull market. Okay, we are at all-time highs. Gold is trading at all-time highs, and that is something that everybody needs to pay attention to. So here is the gold chart, and obviously you can tell from 2016 we've gone nothing but up. But let's just look at from 2024 end, we've gone parabolically higher. And the question is, a lot of people say, well, it's going to pull back, but what happens if we have similar situations and conditions that are present? Okay, history does repeat itself, but it's not exact, but it will rhyme. Okay, so is there a condition in which this gold, even though it's run up in 1987, everybody was talking about the stock market and the gold, even my parents, who basically were not market savvy, but they basically were talking about that, and everybody said gold was at an all-time high in 87. It started to move higher, 28.7%, much, much higher before pulling back. The very next criteria is obviously the rising inflation and that slowing economy, stagflation. I've been talking about ad nauseum on all my videos about consumer demand destruction, the recession that is already here, but people refuse to look at. Okay, or those that are in our governmental reporting agencies are basically pretending that we're dumb and that we don't see boots on the ground what's going on. They're telling you that inflation is contained. Bernanke said the same thing in 2007 and 2008, that the effects of subprime was largely contained. Okay, and what happened then? I'm going to leave that to your imagination. So to control the inflation, our Fed, our esteemed Fed, right here at this arrow right here, okay, right here, cut 50 basis points. That was a significant first cut. That was the first pivot. Since then, the idea was to bring this TNX, which measures the 10-year treasury yield, down. Instead of doing that, we've gone nothing but up. And this is the ending point print today, 38.5. You just moved the decimal point over to the left. It's 3.85. It is insanely high, not compared to 1987, but it is something that we're struggling with because we printed all this money. And basically, inflation is coming back to basically roost at this point. Okay? Watch what they do, not what they want you to believe. And technicals are pointing to more upside in yield. What that means is we still have an inflationary problem, just like we did in 1987, and gold is going bonkers. And this is obvious to you that most of our trading now is not done by human beings other than retail and some hedge funds. Most of the trading is done by algorithmic computer trading. 85% of the market or higher is being done, controlled by that, which is not the same, but it's similar in a way that the computer trading algorithms started to come into vogue in the market. We're now dominated by it. Okay, now the other thing is rising tensions in the Middle East. We know, unless you're hiding under a rug, that Iran bombed Israel in response to, killing a bunch of their generals and high-end officials in Hezbollah, which is their proxy army in Lebanon. Okay. As a result, they fired over 200 missiles and basically bombed the crap out of Israel. And of course, that is the tension, very similar, I believe, that is setting up to what happened that triggered in 1987 when the U.S. warships fired on the oil rigs that were attacking them. Those are the same type of conditions that exist. Okay. So what do I mean by that? So this is a snippet from the X.com. And basically, Iran did declare war on Iran. A lot of people are saying, hey, this is the premise for the World War III. And these are all the rockets, the missiles that were hitting Israel. Okay. And so, and Russia warned the U.S. When was the last time any type of countries, this is basically the changing of the guard. I don't think we are a superpower like that anymore. We shouldn't be involved in other people's affairs anyways. U.S. and Israel have serious consequences if they attack Iran after this attack. Okay, so now we have geopolitical instability, potential for World War III, far greater consequences than what existed in 1987. And I think this kind of talks about the same thing, but rising Fed funds rate cycle. Okay, so they're done basically raising rates, and so this is where it's a little different. We've been raising just like in 1987, but in 87 they were continuing to raise, and now we are at a point where if we continue to raise, the banks who are holding unrealized losses on their balance sheet are going to have to mark to market, and at that time all hell breaks loose, right? So we pivoted on September 18th with a 50 basis point cut, right? So you've seen this chart before. We've been on a hiking spree all the way, for the last 2.5 years. And then they started doing the language. The last hike came in 2023 in August. And then they started jawboning until they actually did cut at Jackson Hole, okay, in August, right? And then the actual cut came at the last September 18th Fed meeting. It did elicit a little bit of a bounce, and now we're just pulling back. Are we starting to get these pullbacks? And if you want to see these charts and analysis, just go back up to like a couple months. I've been talking about this forever, folks. Just want to remind you, gold is at all-time highs, just like in 1987. Okay, and we have geopolitical instability, except right now we have Russia threatening U.S. and Israel. If we attack in retaliation to Iran's attack, that there's going to be serious consequences. Mind you, there is already a war going on in Ukraine right now at this moment. Okay. So, we have current historic crash in October 2024 that might be manifesting right now as we speak. Okay, and so these are additional criterion that why I think a crash is looming here in Rosh Hashanah cycle, sell in Rosh Hashanah, buy on Yom Kippur. Okay, here's the additional things. East Coast ports are closed. Okay, I don't care what the opinion is on this. I think it's very uncanny that this is happening less than 32 days to go in the election, maybe shorter, November 4th, I think. ILA is the International Longshoremen's Association, and I've done some tweeting about that, and I have some strong things that I want to point out. It looks like the president, the head of ILA, went to Cartier and had a shopping spree. I mean, the watches and everything else, and yet he's talking about how these longshoremen who are making on the average 150K plus 30K in medical benefits are not making enough, and they don't want automation like in China, right? And he doesn't care if regular Americans suffer. Boy, that is very, very totalitarian thing to say, but there is a closure, and that's going to further affect and impact, if it continues to go further, the economy. Okay. So we have slowing economy. Let's just face it, okay? Let's call it recession, okay? Let's call it for what it is instead of pretending that we're not in a recession, you know? And then we have consumer demand destruction. I've told you from Dollar Tree all the way to Federal Express's earnings, to Costco's earnings, AutoZone's earnings, just about any retailers, okay? And right, Restoration Hardware, they're coming for you next. I get it. That's the one that's been confounding me. But there is consumer demand destruction. People don't have enough money to even buy food. They're buying it on credit cards, or they're maxed out on cards. The leisurely things, the discretionary items that they used to buy are basically no longer enjoyed to support this bull market. Okay. Banks are also sitting on toxic unrealized losses. We talked about that. Here's the big one, though. Israel, despite warnings from Russia to U.S. and Israel, they're threatening a retaliatory strike against where? Oil and energy infrastructure, okay? We have on that news, for that reason, we have oil going gangbusters, right? And I've warned you guys about this, that even though there's consumer demand destruction and the world global economic output is slowing, thereby oil should slow down. But when you have geopolitical instability, and let's face it, I think that's why we go to wars, right, over oil. And, they got to find a way to raise the oil prices to keep the economy going, get the petrodollars flowing, right? You see, that's how it works. So since I've talked about oil, I've been telling people that it's going to bottom around 68 to 66, and here we are. I think if a war breaks out, it's going much, much higher, to 82 plus, maybe even into the hundreds. Okay, we'll find out when we need to actually do some technical analysis. I talked about rising TNX, right? Does that look like a rate cut has happened? What is going on? Okay, there's some discrepancies, and then the dollar getting more and more expensive. So I guess that's good in terms of the yen carry trade, but rising dollar just makes everything more expensive for to carry on the trades. Gold sitting on this wedge formation right here. This is gold, GC. Okay, I believe we're going to chop around here a while and then start moving higher if there is any type of issues happening with Israel. So here we go. Israel's threatening massive retaliation. It's for tit for tat. War drumbeat sounds louder and louder each day. Okay, first the bankers hyperinflate and crash the current monetary system. They start wars and bring a new monetary system. Okay, that's how it works, folks. Okay, and they're trying desperately to create those conditions for World War III. That's why I believe something's going to be happening, and things are rhyming, aren't they? Okay, I hope I'm making that clear. And then, of course, we got Rosh Hashanah. It began on October 2nd. It's going to extend into October 14th. But I think this year, there's that saying that says, sell on Rosh Hashanah and buy on Yom Kippur, which starts on the 14th. I think buying, they might be talking about is buying gold and silver, oil, all the commodities like wheat, buy VIX, buy puts, potentially. I do believe we're going to have a massive rally after we get some clarity after the election, especially, I think, regardless of which candidate wins. I mean, I think all candidates are selected, not elected. And then, of course, we have the rising 10-year Treasury yield despite Fed rate cuts. I just showed you that TNX. Is that normal to you? Okay. Something is broken, folks. Remember, sell on Rosh Hashanah and buy on Yom Kippur, but I think buy on Yom Kippur is going to take on a new meaning heading into elections. But towards the year end, sometime in November, I do believe conditions will exist for a rip your face off bear market rally heading into probably end of January to February. I think that is exactly what's going to happen. Okay? So in summary, what am I talking about? I think there is eerily similar 1987 style stock market crash warning that I need to give. Okay, I'm not saying it has to happen. I'm just saying pay attention to this and then act accordingly if it comes. Stop being so damn bullish. Okay, we are chugging at near all-time highs, and conditions are very similar. And those who choose to ignore history are doomed to repeat that same mistake. Okay. Am I saying that the market's going to crash by 57% in 2 days? That gold is going to go like 35-40%? Maybe, maybe not. But if you don't prepare, you won't know. And you don't want to be the guy that's stuck unprepared. Guys, gold's at near all-time highs. All-time highs, okay? And that is the same condition that existed in 1987. Okay, inflation is near all-time highs while fears of recession is growing, just like in, what? 1987, okay? Here's what we think. I think gold's going to go 2850 plus if this confrontation with Israel and Iran accelerates and people start choosing sides. And then, who knows? I mean, in China, they're threatening Taiwan, okay? Rosh Hashanah generally brings about turmoil or historical events, moments, okay? End of wars, start of wars, market crashes, just assassinations. It's just, I don't know why it happens around that time. But, I think powers that be are very numerological, biblical, and, I don't know, lunar? I mean, there's a whole slew of things on that. I'm not smart enough to figure that out. Watch the Israel and Iran contagion. That's what we're looking for. As we head into this weekend, conditions are ripe for the similar type of U.S. warships firing on Iranian oil rig and causing massive hysteria. And if people start choosing sides, I think that's very, very possible. And like I always say, bankers create all the financial problems, then they benefit from it. And then when they're about to get arrested or get in trouble, they start wars. They reset the system, and then they make their money all over again. Markets are stalling at near all-time highs. And post-election mega rally, I think it's going to happen after that. It's sometime in November. And I'll give you more video on that as we get there. Into February 2024 is possible. Markets are not, I didn't say are, I'm sorry, this is not are not, okay, exact, but they do rhyme, and maybe too much in this case. I mean, there is so much similarity to 1987, it's not even funny, folks. I mean, pay attention. Be aware and act accordingly. And if it doesn't happen, well, then you could say, well, nothing happened to me. I'm a big boy. I can handle it. Anyways, thank you so much for watching. Follow me at GalaxyDocMarketX.com. Follow us. There's a lot of great discussions there. And like us, share us, and above all, comment, good and bad. And hit that subscribe button. And then, of course, if you want to learn about working with me, okay, I have some affordable packages for those of you that just want the beginning of the day market commentaries, pivots, and weekly watch lists. Email me at coachbrandon@protonmail.com. Otherwise, enjoy the video. I'm not saying go out and buy puts or do whatever. It's not intended as a financial advice, but as an exercise in how things are so similar at the moment. Anyways, okay, let's go get some alpha. Good luck out there.